Ethical behavior is fundamental to effective corporate governance, professional credibility, and sustainable organizational success. In an increasingly globalized business environment characterized by complex stakeholder relationships, technological innovation, regulatory scrutiny, and heightened public expectations, organizations and professional accountants require clear ethical frameworks to guide decision-making and maintain public trust. Within the program, corporate and professional codes of ethics provide structured guidance for resolving ethical dilemmas and promoting responsible conduct, while the concepts of ethical threats and safeguards recognize that ethical behavior may be challenged by personal interests, organizational pressures, or external influences. Effective governance therefore requires not only clearly defined ethical standards but also practical mechanisms that protect ethical decision-making when conflicts arise. Ethical leadership strengthens stakeholder confidence, protects organizational reputation, and supports long-term value creation through integrity, accountability, and responsible professional judgment. Corporate and professional codes of ethics provide significant benefits by establishing a common framework for ethical behavior across organizations and professional communities. According to the framework, one important benefit is that ethical codes provide a framework for conflict resolution, enabling managers and professionals to evaluate ethical dilemmas systematically rather than relying solely upon personal judgment or commercial pressure. Ethical principles create a consistent basis for decision-making, reducing uncertainty when individuals encounter situations involving competing stakeholder interests, confidentiality issues, independence concerns, or conflicts of interest. By providing recognized standards of acceptable behavior, ethical codes strengthen organizational consistency and promote fair treatment of stakeholders across different business situations. A second advantage is that ethical codes provide guidelines for similar ethical disputes and methods of resolution. Organizations and professionals frequently encounter recurring ethical issues relating to financial reporting, corporate governance, customer relationships, procurement, taxation, or professional independence. Ethical codes establish common approaches to addressing these situations, promoting consistency and reducing variability in ethical decision-making across departments and jurisdictions. Standardized ethical guidance also facilitates employee training, supports professional development, and assists organizations in embedding ethical values within corporate culture and governance systems. Consequently, ethical codes contribute to organizational stability and reinforce stakeholder confidence in management integrity. The framework also highlights that ethical codes provide boundaries across which it is ethically unacceptable to pass, clearly distinguishing acceptable professional behavior from misconduct. These boundaries assist employees and professional accountants in recognizing situations involving unethical practices such as fraud, corruption, manipulation of financial information, conflicts of interest, or misuse of confidential information. By defining minimum standards of conduct, ethical codes reduce ambiguity and encourage ethical leadership throughout the organization while reinforcing accountability and professional responsibility. The existence of formal ethical expectations also supports disciplinary procedures and governance oversight where unethical behavior occurs. Despite these advantages, the program recognizes several drawbacks of corporate and professional codes of ethics. One limitation is that a code is only a general framework and may not fit every precise ethical issue encountered in practice. Modern business environments present highly complex situations involving competing legal, commercial, and social considerations that may not be fully addressed through standard ethical guidance. Consequently, professional judgment remains essential when interpreting ethical principles within unique organizational contexts. Ethical codes should therefore complement rather than replace critical thinking and professional skepticism. Another limitation is that ethical codes can be interpreted differently by different individuals, leading to inconsistent conclusions regarding what constitutes appropriate ethical behavior. Cultural differences, organizational pressures, personal values, and professional experience may influence interpretation, resulting in disagreements despite reference to the same ethical framework. Furthermore, there may be no clear or effective punishment for breaching an ethical code, particularly where enforcement mechanisms are weak or organizational culture fails to support ethical accountability. Without effective governance and leadership commitment, ethical codes risk becoming symbolic statements rather than practical standards influencing organizational behavior. The framework defines ethical threats as situations in which an individual may be tempted not to follow the applicable code of ethics, while safeguards are guidance or actions designed to reduce or eliminate those threats. Ethical threats may arise from financial incentives, self-interest, familiarity, intimidation, conflicts of interest, organizational pressure, or personal relationships that compromise professional judgment and objectivity. Enterprise governance therefore requires proactive safeguards capable of preserving ethical independence and supporting sound professional decision-making. The existence of ethical threats does not necessarily imply unethical behavior. Rather, it highlights the importance of mechanisms that maintain integrity when ethical pressures emerge. The program identifies three principal categories of ethical safeguards. Professional safeguards include education and training, continuing professional development, CPD, monitoring of professional work, and disciplinary proceedings established by professional bodies to reinforce ethical competence and accountability. These mechanisms ensure that professional accountants maintain current ethical knowledge while recognizing potential threats to independence and integrity throughout their careers. Continuous education and oversight therefore strengthen public confidence in professional standards and ethical conduct.